Today in this video, we're going to talk about what is the best type of mortgage to get. What is the best type of mortgage for me? One that you can get approved for. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area, and my firm is Southern Living Realty Partners. All right. This is a question I've been getting quite a bit. Another one of the Ask the Underwriter questions. And what I want to say is everybody wants to know what's the best type of mortgage I should get. First of all, the best mortgage is the one you can get approved for. The servicing of the mortgage, meaning who you pay your money to and who collects the money and pays your tax and all that, that's irrelevant. So the company does not matter, because 9 times out of 10, your mortgage will be sold to another party for you to do your monthly collections to, your monthly payment to. So don't worry about it. Don't worry about the company. It's more about the type of loan. First of all, of course, a fixed rate mortgage would be the best for you. And let me say this, in saying fixed rate, that just means that the interest rate will not change. So if you get a 5% interest rate, that interest rate will not change, but your payment, your monthly payment can still change, because your monthly payment for the vast majority of us, it includes an escrow account for our property taxes and our insurance. So if your property taxes go up, your mortgage payment goes up. If your homeowner's insurance or hazard insurance goes up, then your payment goes up. Those are the two variables that you have no control over. So if those numbers go up, because I tell you, they don't hardly ever go down, but they always go up. That's the ways that your mortgage payment can change. And you have no control over that. I know a lot of insurance companies all over the country, no matter where you live in, they're increasing homeowners insurance. They're increasing car insurance, the premiums. So you have no control over that. Now, when your property taxes increase, you can try and protest that with your local, county or city government, your parish government, about your property taxes. But really, no, there's no real way to get around these rate increases. Now, you can always shop around on your car insurance, your homeowner's insurance, and see maybe if one company can give you a different price. I suggest you shop your homeowners and your car insurance at least yearly. Sometimes you may need to do it, every 6 months, or you may need to do it more often. Let's say you got kids who are coming of age and they're going to be licensed drivers. Okay, so you may want to look around and see who can give you a better price on your car insurance, and keep it all at the same place. Keep your homeowners and your cars together so you can get a discount. Okay. Now, when it comes to looking at what type of mortgage you should get beyond it being a fixed rate, first thing I would do if I were you is I would look and see where is the house located. And let me say this, I'm not saying this because I have worked with USDA. I'm just telling you, if the USDA, in my opinion, is the easiest one to get approved for. So if you are looking in what is considered rural according to the map, USDA has a map for every city, every state, and it'll show you, like if you're going to be in the city, living in the city, they probably won't fall in rural. I know here in Nashville, we've got some counties that surround Davidson County, where Nashville is located, like Nashville's in the middle. And then there's 8 surrounding counties. There's a rural area in all of those 8 counties, So you just may want to look and see where is the property located where you're thinking about trying to buy. And if it is in a rural area, I would try that first, because, with your USDA, that's 100% financing. You don't need a down payment. The seller can pay your closing costs, or you can get assistance. A lot of your down payment and closing cost assistance programs that you have in your area, you can use those funds and those services to pay your closing costs on rural housing loan. So number one, I would look to see where is it located. Number two, if it's not in a rural area, then you're going to be looking at either probably a conventional or an FHA loan. I'm not trying to exclude my veterans, but veterans, y'all know, anybody that's a vet, raise your hand. You should be doing a VA loan regardless, because a VA loan, again, is 100% loan, no money down. The seller can pay your closing costs. You can get assistance just the same way as a rural housing loan. So for my vets, you should always be looking at to use your VA entitlement. You served, you put on those boots, you've done your time, so you should be taking advantage of your benefits such as your VA loan. Okay, so back to everybody else who's not a vet, who's not a veteran. So if you don't fall in rural housing, I think you're either going to be looking at a conventional or an FHA. Now, the traditional thought on conventional is you need 20% down to avoid, you would put 20% down to avoid the mortgage insurance premium, because FHA and conventionals both have PMI, or your mortgage insurance premium. There's going to be a lump that's going to have to be paid up front, and then there's a monthly payment on the mortgage insurance premium every month. Remember, and I've gone over this before, that mortgage insurance is not for you. Listen, this ain't got nothing to do like with your homeowner's insurance, life insurance, none of that stuff, okay? Mortgage insurance is to protect the lender. It's a policy that the lender takes out against you, okay? And it just says, hey, if Jane Doe defaults on this loan, I've got this premium, I've got this policy that I can go cash in, and they're going to pay me the difference between what I have to, like if the foreclose on for $100,000 and they only get $70,000 back from paying the house, the mortgage insurance will kick in and give the lender the money to be made whole or close to whole. Okay. But again, that mortgage insurance policy is paid by you, and it does nothing for you. Even if you get foreclosed on and they get money from the mortgage insurance, right? Then the mortgage insurance is liable to come after you. The lender can still come after you because they're not going to be made completely whole. A lot of times they'll get some money, but they won't be made completely whole. So just remember that mortgage insurance premium is included in your payment on a conventional or an FHA, but you got to pay for that. So I will say this, FHA normally has lower monthly premiums on your mortgage insurance. So if I had to choose, I guess I would say FHA. Again, I would say if I had to choose, I would choose the FHA loan. But let me say this, because of the lower premium, but also on conventional, you can do a lender paid MI, LPMI, where the lender pays for that mortgage insurance premium all up front. Okay. Now, normally when you're doing an LPMI, it's a higher interest rate. It's a higher interest rate because the bank has to make the difference. See, they're gonna pay that whole premium in a lump up front, and so they charge you. Again, you're being charged for all of it. You're paying for that mortgage insurance either which way. So even if you have a lender paid MI, it just means that normally your closing costs are higher and your interest rate is higher because the lender has to be reimbursed for the money that they pay up front for you. And I know that sounds like, ooh, but I wouldn't want that because that means that's more money I got to come to the table, but your payment would be lower. You see what I'm saying? They're paying for the whole premium up front. So your payment would be lower. Technically, it would be lower because you don't have to include that monthly MI in there, that monthly mortgage insurance premium in there every month. So let's say if it was $100, right? Then your payment would be $100 less because the lender's paying it all up front. But again, that would mean more money you'd have to bring to closing, and or a higher interest rate. So it's 6 of one, half dozen of another. You just have to, really, really look at that and consider your options. So FHA then and or conventional, because there are some 95% conventional loans. There's 97% conventional loans. Long story short, the more money you have to invest in your down payment, your reserves, depends on, that'll help you to get qualified for different types of loans. That's what it's gonna come down to. So you're still gonna need at least 2 months of reserves. Remember, reserves are the money that's gonna be left after you close. And we always want to see, as underwriters, we want to see at least 2 months PITI, principal, interest, taxes, and insurance. So your whole note, if your whole mortgage payment comes out to be $1,500, we want to see that once you close, like let's say you got to bring $7,000 to closing, okay? You got to bring $7,000 to closing. So I want to see $10,000 on your bank statements. That's what I want to see, because I know you're going to bring $7,000 to closing, and that's going to leave you with $3,000. So that's going to leave you with 2 months reserves. That's what we mean when we say 2 months of reserves. So that's what you want to be striving for. No matter what loan you do, it will help you to get qualified. It will help you to get approved if you have reserves. Even if you get assistance from some down payment assistance place, or somebody, the government, whatever, is going to give you help with your closing costs and or your down payment, you still want to have the reserves. You still want to have the reserves. We still want to see that you have some skin in the game, okay? And that's, your amount to close, that includes your earnest money or trust money that you put up. So if you put up $1,000 in earnest money, when you write your contract and you need, $7,000 to close, then that means you're going to bring $6,000 to the table, and because you got $1,000 that you put up in earnest money. And one more thing I want to talk about, I used to do mortgages, and I've had so many calls. I have had so many calls, and so many of you all that have reached out that you need the help, with, getting a mortgage, whatever, you want a consultation or whatever. I've got a link. I'm going to be back originating for a bank out of Texas. I'm going to give y'all more information about that. But if you want to schedule a time to talk about getting a mortgage, you need some help, I'm going to be available. I have a link down in the description. You can check out my website at rhondaburgess.com. You can check out it's like my link tree at rhondaburgess.me. rhondaburgess.me, rhondaburgess.com. You'll see links on there where you can schedule a call if you like to talk, and I can help you with originating your loan. If you need help with, buying property, I am connected with a network of real estate agents all over the country. I have those links on my website also. So whatever you need, whether it's here locally in Nashville with buying or selling, or you're out wherever at in the country, I've got the hookup. I've got people there. And again, y'all can reach me, get in touch with me at rhondaburgess.com and rhondaburgess.me. I just want to say thank you. I'm looking forward to everybody having a successful 2024, and we're going to get this. Okay? Thank you, and as always, have a blessed day.